Fiore Gold, F on the Vancouver Stock Exchange, so the small board in Canada. Good little company here. I'm really excited about the results. Lots of reasons to like this company. It's 100 million market cap, or I should be more precise, 96 million market cap Canadian, so it's not going to be for everybody. But the results are really good, and the valuation's really good. And so it might fit within some portfolios, but obviously 100 million market cap Canadian is not huge. Although I don't see the same level of risk that I normally associate with 100 million market cap company. So let's jump into it. I'm going to start with our model, and then I'm going to get to the press release and some other modeling we've done outside our regular model. So here you see right away, this is how we found the company. We screened it, and we saw improving return on capital, growing the capital, and way undervalued, and a pretty normal scenario there. Nothing too crazy, and it's just the default. It doesn't account for everything. It's just kind of a starting line, baseline start, and you see it's we say it's worth $1.81. It's trading at 70 cents. Oh, by the way, even though it's a Canadian company, they do report in US dollars, and we're using everything is in US dollars today. So I think it's actually trading at about 99 cents Canadian. So let's just bear that in mind. This is the US dollar, because that's what they report in. So we try and stick with that instead of converting everything over. It does trade in the US, by the way, on the pink sheets. I'm not sure what the ticker is down there, but it is on the pink sheet. Okay, now with that out of the way, obviously that's a very good profile that we would get excited about right away. Not only is it positive return and good return, it's improving, and they're putting capital to work. Okay, so that's great. I also want to take a look at some almost back of the envelope, maybe a bit more. I did use a spreadsheet, but it's kind of the back of the envelope calculations based on the press release that got the stock moving. It's up 12% today, and so let's jump into that. And like I said, it's kind of back of the envelope here. The kind of that yellow tinge area is kind of the facts from the press release. Okay, so what do we have? Ounces. They produced 12,085 ounces this quarter. It's only a quarterly number. And the cash cost at the Pan mine, which is their only operating mine at the moment in Nevada, was $983 an ounce. And the all-sustaining, meaning replacement costs and depreciation, that kind of stuff, was $1,099. And the all-sustaining cost total Fiore, so this includes some other mines that aren't even producing anything yet, is 1,196. Okay, great. And from that, this was the realized gold price, and then the cash flow from, depending on which cash cost you want to look at, it was $7 million, 5.7, and 4.5. The reported operating cash flow was 3.9. So there's a difference between this all-sustaining total Fiore cash flow that we calculated versus what they reported in the report. So cash flow, although it sounds like a very standardized term, it's actually not a standardized term. It's not a GAAP term. It's a term that you can you have a little bit of flexibility in what's included and what's not included. Like, are they including taxes? Are they not including taxes? What is it exactly? Okay, so I don't know exactly what their definition is. Doesn't really get into that detail, but I do know our cash flow from ops is about 4.5 million. Excuse me, and they said 3.9. So let's say I'm going to assume that they're right. Let's go with the lower number. And that's 84% of what we calculated. Okay? And if you just walk through that math and you go, okay, so the full year cash flow is 4 times that. The enterprise value right now is 72 million. So it's only trading at 4.62 times. 4.6 times. That's cheap. right in and of itself, right off the top, really cheap. Okay, but that's using a 1576 gold price that they actually realized, because gold has risen. So now gold is about 1734. Let's say they do the exact same production, no growth, nothing special. Well, that all works out to let's do a little bit more. Again, which cash flow do we use? So we use the all sustaining, and we come up with this. We actually took that down by 15%. So same relative to what the reported was versus what we calculated, and that comes up to 5.5 million in cash flow, and so the full year cash flow would be 22, and that would only be trading at 3.26 times. I mean, this is ridiculously cheap, right? Okay, now there's potential that the gold price could go to 2,000. I mean, it's possible. We don't know. And if that all happened and that all came through, it'd only be trading at 2.18 times cash flow. Okay. But as I said, there's more to the story, right? So even ceteris paribus, status quo, it's quite cheap. Now, that mine alone can grow. There's two other mines that are not operating. They're just, getting underway. Just forgetting exactly how big they are. Let's call them roughly the same size, okay? They're going to add ounces. I think they announced there was an engineering study. There was 2 million ounces in one of the locations, okay? So 2 million ounces can keep you going. At this current production rate of 12,000 ounces a quarter, it's roughly 48,000 ounces for a year, right? I just multiply that by 4. They've also said their goal is to get to 150,000 ounces, so literally 3 times. So could you imagine, now let's say everything works out, we get a better gold price, the production gets up to $150,000 ounces a year. We've already shown that it at the current production at $2,000 an ounce of gold, being rosy, it's only trading at 2.18 times. We tripled that cash flow by just having the same 150,000 ounces. I mean, it's probably trading at less than 1 times cash flow. Gets better. Balance sheet's really good. Oh, I guess we should probably flip back to the model for that. And we're a quarter behind here, so let's flip to the model. Working capital, $23 million or 24 cents per share. It's now up to 28. That was in the report, their working capital. Okay, and they only have 4 million in debt, like virtually non-existent debt. Even for a company this size, that's really small. That's nothing. I mean, look, there's a lot to like here, especially if you believe gold can go higher, which I do. I don't like to get too crazy on gold. Trying to figure out the price of gold, I'll just tell you, I don't care how good an economist you are, how good you are at figuring out commodity prices. It's very difficult, no matter what. They're cyclical, and lots of factors go into that. So I usually just say, hey, whatever the price of gold is now, that's probably accurate going forward. Let's just use that. But I would say I'm starting to think gold can go higher, just because all the stimulus, flooding the market with more money, printing money, all that kind of stuff that's going on around the world. Gold's, that's a good environment for gold, let's just say. But, there's lots of other factors. Nonetheless, as you can see, trading at anywhere, depending on how you calculate cash flow and what assumptions you have, it's trading at anywhere between literally less than 1 times cash flow to maybe up to 4 times cash flow. Again, I know it's a big range, but that's cheap. The worst case scenario where it's trading at 4 times is, that'd be the most expensive way to pay. It's still pretty cheap. All right, and a good balance sheet. I just went over all that stuff. So just want to be clear. Pretty bullish on this gem. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or a retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.